Real estate investing after 50 isn't about catching up. It's about stepping into the season of life where your wisdom, relationships, and resilience become your biggest competitive advantages. The truth is, every investor has a natural archetype, a style of thinking and operating that shapes how they approach deals, people, and risk. By understanding your archetype, you unlock clarity. You'll know which strategies fit your personality, which pitfalls to avoid, and how to merge timeless principles with today's fast-moving trends. So let's break down the 5 most common investor archetypes and uncover what they mean for your success. 1. The builder. Core traits: hands-on, detail-focused, enjoys improving properties. Timeless principle. Builders have always believed that value is created through sweat equity. They know that a property others overlook can be transformed into a gem with the right updates. Classic example. In the 1970s, many investors made fortunes buying tired duplexes, repainting, updating kitchens, and re-renting at higher rates. Modern trend connection. Today, builders thrive in value-add investing. This could be a BRRRR strategy: buy, rehab, rent, refinance, repeat, house flipping, or small multifamily rehabs. With the demand for updated rentals soaring, builders who understand budgeting and project management are still in high demand. Action step. Walk a property this week with a contractor or inspector. Ask what simple changes could create the biggest boost in rent or resale value. 2. The visionary. Core traits: big picture thinker, future focused, sees opportunity before others do. Timeless principle. Visionaries always look for the next neighborhood, the next wave, the next opportunity. They are patient, willing to hold property for years until a market matures. Classic example. In the 1980s, visionaries who bought in unpopular downtown areas that later gentrified, like Brooklyn or Portland, built generational wealth. Modern trend connection. Today, visionaries thrive by following migration trends, such as retirees moving to warmer states or remote workers relocating to affordable small cities. They may also lean into short-term rentals in up-and-coming tourist spots. Action step: study local planning and zoning board minutes. Where is the city investing in new transit lines, hospitals, or shopping centers? That's where visionaries strike first. 3. The caretaker. Core traits: people-focused, relationship-driven, values stability and community. Timeless principle. Caretakers know that tenants are partners, not problems. Long before tenant retention strategies became a buzzword, caretakers kept their buildings full by treating people with respect and offering safe, clean homes. Classic example. The mom-and-pop landlord who owned a few local properties, remembered birthdays, and kept tenants for 20 years. Their cash flow was rock solid. Modern trend. Connection. Caretakers align perfectly with today's movement toward impact investing, earning returns while doing good. By using property management tech, online rent collection, digital communication, caretakers can scale their impact while maintaining a personal touch. Action step. Send a simple tenant survey this month. Ask, what's one improvement that would make your living experience better? Acting on it builds loyalty and protects cash flow. 4. The deal maker. Core traits: energetic, persuasive, thrives on negotiation and networking. Timeless principle. The deal maker's mantra is, you don't get rich when you sell, you get rich when you buy. They understand that creative deal structures, favorable terms, and smart leverage create wealth. Classic example. In the 1990s, savvy investors locked down properties with little money down using seller financing, then flipped or refinanced for big gains. Modern trend connection. In today's market, where interest rates are higher and lending is tighter, the deal maker shines by using subject-to financing, lease options, and partnerships. Their ability to see opportunity in complex deals is unmatched. Action step: practice negotiation in everyday life. at the store, on services, or even with utility companies. The better you negotiate small things, the sharper you'll be when structuring real estate deals. 5. The Analyst core traits. Data-driven, detail-oriented, cautious but calculated. Timeless principle. Analysts know that numbers don't lie. They understand that cash flow, appreciation, and expenses determine success, not hype or emotion. Classic example. Investors who survived the 2008 crash often had one thing in common. They bought properties that still made sense on paper, even when values dropped. Modern trend connection. Analysts thrive in today's tech-heavy world, where software like DealCheck, Zillow Rent, Zestimate, or Rentometer helps them crunch numbers in minutes. They're also strong at evaluating short-term rental performance using platforms like AirDNA. Action step. Pick one property listing this week. Run a full analysis. Rents, expenses, financing costs, and ROI. Compare your numbers to online tools to sharpen your instincts. Timeless principles versus today's trends. Real estate may look different today with apps, platforms, and high-tech tools, but the timeless principles haven't changed. Let's break it down. Cash flow. Timeless principle number 1. Cash flow protects you. In every decade, the investors who survived downturns were the ones whose properties paid them every month. Today's trend? Rental analysis apps like DealCheck, Stessa, or Rentometer make it easier than ever to project and protect your cash flow. Leverage. Timeless principle number 2. Leverage builds wealth. For generations, investors have used other people's money to grow portfolios. In today's market, the trend is creative financing. Things like subject to deals, seller financing, partnerships, and even HELOCs. The tools change, but the principle is the same. Leverage wisely, grow faster. Relationships. Timeless principle number 3. Relationships are gold. Old school investors knew their bankers, contractors, and tenants by name, and that network kept their business alive. Today, the trend expands online. Digital communities like BiggerPockets, Facebook investor groups, and LinkedIn are creating connections across the country and even across the world. Discipline. In timeless principle number 4, discipline beats timing. Smart investors never chase headlines. They stay consistent, steady, and focused on fundamentals. In today's trend, that looks like dollar cost averaging, making regular, disciplined investments, no matter what the news cycle says. Because long-term discipline always wins over short-term guessing. So yes, trends may change, but the core truths remain the same. When you combine timeless principles with modern tools, you give yourself the best shot at creating wealth, freedom, and legacy, especially after 50. How to activate your archetype after 50. Identify your strengths. Ask yourself, which archetype best matches my personality and past life experiences? Write it down. Bridge past and present. Connect your archetype to modern tools. If you're a caretaker, use online rent collection platforms. If you're a visionary, research demographic reports and Airbnb trends. Take one focused action this week. Don't wait. The difference between dreamers and investors is action. Analyze a property, attend a local real estate meetup, or call a lender. Final word. At 50 plus, you are uniquely positioned to succeed in real estate investing. You've built resilience, learned from life's ups and downs, and gathered wisdom that younger investors can't buy. Your archetype is not a limit, it's a launch pad. By knowing who you are, leaning into timeless principles, and embracing modern trends, you can create not just wealth, but a lasting legacy. So which real estate investor are you? The builder, visionary, caretaker, deal maker, or analyst? Now that you know the 5 investor archetypes, it's time to claim yours. Drop your archetype in the comments below. Don't stop here. Hit that subscribe button so you never miss weekly strategies designed for 50-plus investors like you.